All right, so I'm going to try again to negotiate my commissions with, I already tried 3 times with no success, and all 3 times they said that they would respond by email, and only once did they respond by email. So I'm going to try again. So I'm going to go to trading, accounts, chat. All right, place in queue 87. Guess while we're waiting, let's review some of my trades. So as you can see in my position tab, in my margin account, I've got a lot of trades or a lot of put spreads. They're mostly earning trades, except for Spotify. I just sold Spotify because it had high implied volatility, but the others, that Google was an earnings trade from last week that I wasn't able to close yet, so I still have it, and you could see it's trading for about, I could probably close it for about $1. I opened it for 95 cents. So if I want to get out of it for break even, I could. I would lose commissions though. And these other ones, this one had earnings or is going to have earnings. Honestly, I don't know anymore. It's really confusing, but it moved hard today because of a merger or something. So I'm not able to close it either. Now I do have a few that were closed for a profit, but with commissions, they really eat up the profits, and that's because I'm only doing one contract because of that $5 flat fee. So that's what I'm going to try to negotiate to remove that $5 flat fee. So you can see Square, where is Square here? I sold it for 85 cents and then I closed it today for 35 cents. So it's about $50, but I have to remove $13 from that $13 of commission from that $50. So it kind of hurts. It's a big percentage since I'm only doing one contract. And Wayfair, where's Wayfair? Open it for 94, close it for 45. So that's about $49, remove $13. Etsy is the one that hurts. Opened it for 80 cents. Close it for 40 cents before earnings. So earnings hasn't been announced yet, but with one day of decay and stock going up, I was able to close it for 50%. So 50% is good in one day, but because it's only $40 and I've got to remove $13 of commissions, it eats up a lot of profits. I'm left with $27 of profit. So, and it's mostly because of that $5 flat fee. So I've got active trader pricing, and this is my commission. So $4.95 plus 75 cents a contract. 75 cents a contract is very fair, but this $5 flat fee every time is annoying to open and to close a trade, especially if I'm only doing one contract. If I'm doing 10 contracts, that $5 gets diluted. It's $5 divided by 10 contracts, and if it's a spread, there's 2 legs to a contract, so it's actually 20 contracts. So $5 divided by 20 is 25 cents. So it's as if it's costing me $1 a contract, which is very fair. So the only way this makes sense is if I do 10 contracts, but 10 contracts is a lot for me. So Questrade's prices are fair if you're a big trader, if you do a lot of contracts. So now I'm at 78. So if we look quickly at my spreadsheet, so this is for this week. Not all of them are closed yet. So the ones that are closed have a closing price to it here. So it's a total profit of about 378. But I got to remove about maybe $96 of commissions from this. So down to like $278 of net profit on these trades. So a little bit disappointing to see a big chunk of your profits get taken away. Fastly is an earnings trade. I've got a put spread for August 21st with an 85 strike. I'm hoping to close it after earnings tomorrow. Collected about 85 cents or $85. I did one contract, so they're all one contracts. Roku, same thing, hoping to close it tomorrow. I've got a 140 strike. It's trading at about 166 right now. Hoping to close it for tomorrow. Collected $1 on Roku. Stamp has earnings Thursday, so hoping to close it Friday. Collected about 85 cents, I believe, on this one. If I go to orders, executed, STMP, 90 cents, okay. My strike is 220. My expiry is August 21st. But if it moves up and there's a little bit of volatility crush, I can close it the next day, like I was able to close Square and the other trades. TWLO already had their earnings today, but it dropped a little bit, so I'm not able to close it. So I collected about 80 cents to open this trade. So I'm trying to close it. For 40 cents, and right now, as you can see, I could probably close it for maybe 60 cents or 70 cents. So I have to hold on to it a little bit longer. But my strike is 242.5, so I'm safe. It's trading at 274, but I'm just not able to close it right now. That's the only problem. So it's gonna be similar to Google. I might have to hold on to it a little bit longer. All right, still 70. So according to Finwiz, Square has earnings tonight, but it actually had it yesterday. So this is not correct. So you always have to use different sources to verify earnings information. But Roku is announcing earnings tonight, which I already have a put spread on. Etsy, I had a put spread that got closed. Western Digital and Fastly. So Fastly has really high IV. Honestly, I don't even know what they do, but the stock has really high IV. And the reason why I don't care what they do is because I don't try to guess direction. I know that there's no point trying to predict market reaction of earnings. It's really random. I'm just trying to sell volatility. So a trade idea for Fastly, if I just want to sell high implied volatility, expiration August 7th, it's got earnings tonight. So it should move hard. And in the past 4 earnings, it moved 27% up, 8% down, 13% up, and 25% down. So it's capable of doing many things. The highest is usually around 20 to 30%. So let's choose all strikes. Let's see what kind of premium we can get if we go as far as possible. So if we go to the 165 call, we can get about 20 cents. If we go to the 150 strike, we can collect 60 cents. So that's not bad. Maybe I could do 1 or 2 contracts at a 150 strike. Now the risk is unlimited. If Fastly opens above 150, any dollar amount above 150 times the number of contract is my loss amount. But if it stays below 150, then my max profit is what I'm collecting. On the put side, I guess I can go to maybe an 85 strike, collect 55 cents. So let's see what 30% of 110 is. 30% I guess is probably the highest it's ever moved. So $33 either higher or lower. So the 150 call seems safe. The 85 seems a bit close. Maybe not the put. Maybe I would take the call side. Let's see what the expected move is. Expected move is about $8 plus 8, 8 plus 9. So it's about $15 the expected move. So $30 would be 2 times the expected move. All right, 64, still waiting. Let's look at Etsy. So expected move, which is just simply adding up the at the money call and put. So 7 plus 7, it's about $15. Let's look at the call side. I can probably go to 175, collect 40 or 50 cents, even at 170 strike, which would be about 35 points away. Twice the expected move. Let's see how Etsy performed in the past. So down 4, up 9, down 12, up 17%. So the highest is up 17%, and down 19% is the lowest. So let's say let's round it to 20%. So 0.2 times 135. So 27 points away. So plus 135 brings it to 162. So maybe 165, maybe 170 would be safer. That's assuming that it doesn't move higher than what it did in the past. It could easily move higher than what it did in the past or lower than the past, of course. And if we look on the put side, we can go as low as, I don't know, maybe 110, collect 50 cents. That's $25 away. But I guess we can have an assumption on Etsy. It is an online store. So most likely it's going to go up in earnings because of COVID. So there's more action online. So you know what? I think I'm going to play Etsy. I'm going to sell a naked call at 165. I'm going to put an order at 90 cents. I'm going to put an order at 90 cents at the 165 call. So the risk with this is unlimited. Any dollar amount above 165, Etsy trades at. Come expiration, if I'm doing 1 contract times 100, that's how much I'll lose. So if it's trading at 170, I would lose $500 minus the premium that I collected. So the risk is unlimited. The capital required to place the trade is only $29.70. So I'm going to place that order. If it gets filled, it gets filled. If not, we'll see what happens. So now we're down to 53. So let's look at Fastly again. I think I'm leaning towards the call side. So 165, let's go at the furthest strike just to make things safer. So I said Fastly, highest it has ever moved is 27% up, and that was last earnings. What are the odds that it does it again back to back? It's very possible, but what are the odds? So what's 27% again? I forgot. So it's about 30 points, I guess. 110 times 1.3, let's say. So 143. So I'll go with the 165. See if I can collect 25 cents, maybe do 2 contracts, make it $50. Commissions on that would be a lot. It would be about $6.50 in and out, and I do plan on closing it. I'm not going to hold till expiry. So that would be about $13 out of the $50. So you see, that's what I mean. Probably not worth it unless I do more contracts or I get closer, but I'd rather be further and safer. Let's just see how much capital required is for, what is a capital requirement for this trade? So it's 927. Okay, not much. Okay, I'll do 4 contracts at 25 cents. Send order 46. I'm going to change the strike on Etsy. I'm going to do the 180 strike. I'm going to do 4 contracts at 30. Let's do 32 cents. Capital required is about 6,000. So sell to open for Etsy August 7, 180 call, 32 cents. Now let's look at Roku calls as well. So the furthest I can go is 245. So let's put an order. Let's do 5. Let's see how much capital requirement is to it. So let's do 20 cents and 5 contracts. For Roku at a 245 strike expiring August 7th. Hopefully I close it tomorrow. You know, let's do 22 cents. No, I guess I can leave it at 5 cents, at 20 cents. 39. So in my RSP, I had done a covered call trade on Virgin Galactic. I didn't mind holding it because it's one of those stocks that I just want to give it a try in case it's one of those stocks that ends up being an Amazon stock. All right, so my Roku call got filled at 20 cents. So let me update my spreadsheet. So 08/05/2020, Roku naked call, 245 strike, 20 cents, expiring this Friday. 5 contracts. So yeah, so I did a covered call at a 23.5 strike. I collected $1.50. So my cost really, my net debit was about $22. Right now the stock is trading at 20. So I'm down about $2 if I decide to close the trade completely. But I'll just hold on to it. What I could do is I can sell more covered calls on it. So for example, I can create order here. I can roll the call option or just let it expire worthless and sell a call option next week. So August 7th is the one that I would have to buy back. I click on add call. I click sell. I choose the August 14 expiration, which is next week. And I could choose the either the same strike that I sold at, or I could choose my net cost, which was $22. So if I choose my net cost, I can get about $46 for that. If I choose my same strike that I sold initially, I can get about 26 cents or $26. So if I choose 22, if the stock moves up to 22, then I lose my shares at 22. That means my total profit would only be that $47 that I collected the second time around. But if I choose 23 and it comes back up, then my total profit would be $1.50 plus the $27 that I'll collect the following week, the $26. So most likely I'm going to choose the 23.5, but I'll wait till next week or Friday end of day, because I don't want to pay $7 for this because it's trading for 7 cents. It should be 1 cent right now. So I had, if you remember, I had 37 shares of IWM just sitting there. I sold them today for 152.3 about. So a very small profit on the 37 shares. But I still have my 100 shares of IWM at an average cost of 151.6. So I'm finally profitable on my IWM shares. So if I want, if I don't trust the market, I could just close the trade entirely for a 152 strike and get my cash back, and then decide what do I want to do with with the cash. Although I'd rather have it invested in something, but I'm just not sure what to invest it in. Or I could just keep it in IWM and just keep selling covered calls at a 152 strike. But if I think the market's going to drop again, maybe I could take my money back and just wait for a better entry. And even if it's IWM again, but at least I'll get a better price and I can keep doing covered calls again. So right now, if let's say I decide to keep it and just keep selling covered calls at a 152 strike, or even go a little bit higher. Here, let's look at my options. If I sell the same strike for August 14, so next expiration, I can collect about $1.18. So that's $118 if I keep the same strike, if I don't care losing my shares at my initial purchase price and I just want to collect premiums, I could do that. If I want to keep the shares long term and collect as much capital appreciation as possible, then I want to take a strike that's far out of the money. If I take the 156 strike, I'm going to have to pay. So I'm going to have to come closer. If I take the 155, I'm paying. 154, I'm getting a credit of about $12 or $15. If I go to 153, I can get a credit of $60. So maybe I could choose a 153 strike for next week, collect $62, depending on what my goal is. If I want to keep it, if I want to get out of the trade. And my Etsy call got filled at the 180 strike for 32 cents now. Oh, looks like I could have gotten a better fill. It's trading at 43. The ask is 43. All right, let's go update the spreadsheet. So Etsy 180 call, 4 contracts. It was 32 cents and I did 4 contracts. So opened Wednesday with a Friday expiration. So as you can see, it's got earnings right there in front of you, August 5th, but it's after market close, or at least it should be. So yeah, so going back to my RSP, if I want to close the trade entirely, I can get out on Friday. If it's trading above 152, I can get out on Friday at 152 or close to it. Or I can keep rolling the call option for credits. I think I'm going to keep rolling the call option for a 152 strike. That's what I'm leaning towards. And I'll do the same thing for Virgin Galactic. And in my RESP, I've got Intel that I bought at a terrible price And I've got an average price of 56. It's trading at 48.9. I ended up selling a call at 49 because that's the only call that had decent premiums. And look how close it is. It's trading at 48.9. So my cost is 56. My short strike is for 49. So that limits my upside. That means I have to lose my shares. I have to sell my shares at 49 if the stock is trading above 49 come expiration, which is Friday. So hopefully it stays below 49. But as you can see, I'm very close. But that's the risk with covered calls, is when you buy a stock and then it drops a lot far from your strike, and now your initial strike has no premium to sell, so you have to sell at a lower strike, which has the risk of losing your shares at a lower strike. So that's my problem with covered calls. Ideally, maybe you should wait before selling calls, but I don't like waiting because I don't know how long I could wait. Maybe it'll continue to drop. Who knows? So I don't like to play the waiting game. I want to sell calls every week on my position. The amount can be different. I have no problem with that, but I want to sell something every week. Is that too much to ask for? All right, 29. We're getting there. 19. Man, IWM is flying. Let's see if we can maybe sell something on IWM. Maybe some calls for Friday. Let's see how far we can go. So what, 157? Nah, it should be safe, but still scary with this market. Maybe do 10 contracts at 157. Let's see how much that would cost. Take about 3,900 of capital. No, forget it. So we've got WDC, Western Digital. I think the only thing I could do on that is puts, but I don't know. I don't trust it because it's been losing money the last 4 quarters. Revenues is slightly increasing, but profits are negative. Here, let's look at it. WDC. Let's look at all the strikes. So the lowest we can go on the put side for this expiration Friday is maybe 37.50 and do 10 contracts. Let's see let's see what the capital requirement. I think it's going to be very low capital requirement, $600. So 10 contracts would be about 6,000 capital requirement, and that would be for $100, and I would be about 7 points away. That should be safe, right? 37.5 divided by 44.3. That's 15% away. Let's see how it performed in the past. Okay, so last earnings, it dropped 12%. So that's not good. It dropped 12% twice in the past. So it's capable of dropping 15% easy. Now, will it drop back to back? Probably not. Or if it does drop back to back, it won't be big amounts like that. So I'm thinking it could be safe. So now I just gotta ask myself, is it worth it? For $100, what is my risk? My risk is, it's unknown, of course. If it drops below 37.5, if it drops to 35, then I would lose $2.50 times 10 contracts. That's what, $2,500. Unless I roll the puts. So if I get tested, if the put gets tested, I could roll it the next week. But I don't know if I want to keep rolling. I don't know if I want to play that game. What if I sell the call in case it gets tested? I could probably collect $1. Let's see if I sell the call side. The call side, I can go as far as 55. So can it jump from 44 to 55? For 10 cents, I would do 10 contracts. 55 divided by 44, 25%. Yeah, it has never moved more than 25%. Doesn't mean that it won't move 25% this time. Oh, 15. That moving quite slow. So probably could do 10 contracts at 55. Let's see what the capital requirement is. But I can't even get 10 cents. It would be for 7 cents. So definitely not worth it. Yeah, maybe I should just not do WDC. Although if I do WDC, it would be for the puts. 38 maybe. Come on, 12. Why are they so slow today? Now, stamps.com has earnings after hours August 6th. So expiring Friday. So this one could be interesting. Volatility is very high. But it is a stock that moves a lot after earnings. Let's look at past earnings. So look at past earnings. Up 38%, up 26%, down 50%, down 50%. So it moves a lot after earnings, as you could see, big numbers here. So that's something to watch out for. So let's look at the calls. Now, it has gone up a lot. I think it's trading at all-time highs. So let's look at the calls. What's the highest call? The highest call is about 405, and I can collect about maybe 60 cents. Maybe I could do that. Let's look at the lowest put. At the same time, maybe I could do a strangle. So the lowest put is about 180, and I can collect somewhere in between 15 and 65, although it doesn't look like it has volume. This one has no bid and has a $4 ask. Is that possible? Let's look at the 190. Yeah, so maybe I could do the 190, collect maybe, I don't know, 50 cents or 40. Yeah, 45 cents, let's say. 50 cents is reasonable from that put side. And then I said how much from here, maybe 60 cents. So that's $1.10 for one contract, one strangle. But it would be a very wide strangle from 190 to 405. I think that's fair. Now the question is, should I do it now, although there's still 2 days to go, or should I wait till tomorrow, end of day, before market close? Now for sure, these premiums are going to be different tomorrow. I think I'd rather wait till tomorrow just in case, because as you can see, it has been moving a lot intraday or during the week, just in case it moves more on one side than the other. So just to be really well positioned, really well centered for tomorrow. Still 10, what the hell? Yeah, I think I'm going to wait till tomorrow, but these are some possibilities. So if I look at Market Chameleon just to see implied volatility or IVR, and look for things over 70% IVR with an open interest of over 70% as well. Let's see what it gives me, and I sort by IVR. So the highest is Silver, C Limited, Wix.com. Okay, that's interesting. It's got earnings August 6th before market open. So actually Wix.com, let's check it out. I think I did look at it, but it doesn't have options. Yeah, it doesn't have August 7 option. So yeah, forget it. All right, let's go back. Taiwan. FTNT is August 6th aftermarket. GoDaddy, I checked. Fastly, there it is. Look how high it 106 IV. Implied volatility. I guess I could sell the call. I canceled the order. I feel it's a new stock. It only has it has only had 4 earnings, and it's not enough. Anything can happen. I'd rather pass. I'm too I get stressed too easily. Etsy, I did. Yeah, I guess there's nothing interesting. All right, so my current positions. So my current position right now on my margin account. So naked call on Etsy at 180. I've got a put spread on Fastly August 21st. So even if it drops, I still have time to manage. I still have that Google put spread. Let's see if I can close it now. I can probably close it right now for about 85 cents. I opened it for 95 cents. I guess I'll hold on to it, try to get a profit out of it. I've got LVGO, whatever that is. Can't close right now either, but I still have until August 21st. I think it's trading at around 130. My strike is 120. I got Roku put spread August 21st, and I've got Roku naked call August 7th, or 245 call. I just did with you right now. I've got Spotify 235 put spread August 21st. I've got Stamp August 21st 220 put spread, and I've got TWLO. This one should be closed, but it dropped a little bit. I'm gonna have to hold on to it till August 21st. All right, 6 left. We're getting closer. All right, we're connecting you now. Okay, why am I placed back on the queue? Okay, so I'll start. He's going to have to identify me, so I'll just tell him what I want. I like to discuss my commissions, if possible, to bring them down. I already have. I feel like I'm going to be repeating myself a lot, but I'll just copy paste. I already have active. They're going to talk about active trader pricing, but even with active trader pricing, the $5 flat fee eats up too much of my profits. For example, last month I had $1,500 gross profit with almost $500 commissions, 33% commissions. See, they always do that. They're always over polite. Like, it's okay, I understand. You don't have to. You took 5 minutes just to type this and tell me that you apologize for the long wait. What I prefer is you actually answer the question instead of all these flatteries. So, because I am an active options trader, I place a lot of trades. That makes sense, right? I place a lot of trades, but mostly one contract. So that $5 or $4.95, if they want to get specific, initial flat fee to open or close a trade eats up a lot from the profit. So I would like to negotiate that. I think the only way this works is if I trade normally. Actually, he's going to say technically it's not possible. So let's say if technically it is not possible to change commission structure, I can trade normally and simply request once a month a credit for all the $4.95 flat fees and just leave the 75 cents per contract. Yes, please. Thank you. I would like an answer today. Every time I call in, they say they will email me, but they never do. Okay, so now he wants 8 to 9 minutes. All right, so let's wait. All right, so while we wait, Trade Desk has earnings August 6th after market. So this could be another potential trade. So I think on the put side, capital required will be too high. So I'm not going to do the put side, but let's look at the call side. So I can go all the way to maybe 710. Now I don't know how much I can collect because look at the bid and ask. It's so far apart. So who knows what I can ask, and there's not a lot of volume. In fact, there was no volume today. But maybe if we look at the 20, this one's got 20 to 50 cents for at the 650 strike. So that means Trade Desk would have to move 150 points. So it reminds me a little bit of the Netflix trade. So maybe I could do this one here for maybe 30 cents. Look, the last was 38 cents. And maybe just do like 4 or 5 contracts, collect an easy $100. Now with Netflix, I went a little bit crazy overboard. I think I also did 10 contracts at 48 cents. But I was very scared, so I'm not going to do that many. Actually, let's see what the capital required is for this trade. So capital required is 7,000. So I can't even do 10 contracts or 5 contracts. I could probably just do 2 or 3 max. Because my ME, my maintenance excess, is 34,000, and I don't want to use all of it. I'd like to leave at least half of it available. So maybe I could do 2 or 3, and it's going to be for what, like, right now it's 20 cents. Tomorrow it's going to be at a different price for sure. So for example, last month I had about $280 of total $495 flat fees for options. So I could simply write in every end of the month, to get a manual credit for that. Oh, it looks like he disappeared. I wonder if they're talking to other people at the same time, because sometimes they really take forever to just say a simple sentence. Okay, it's definitely been more than 9 minutes. 243 plus 9 is not 258. So finally writes back, needs an additional 8 minutes, still investigating. But what is he investigating? Can you share what the process is?